Hello, everyone. Welcome to the Nailing FX series. We'll get started in about 6 minutes. Can you please confirm if you can hear me okay? Please, type into the chat and let me know if you can hear me okay. Hello, everyone. We'll get started in about 3 minutes. Can you please confirm if you can hear my voice okay? You can type in the chat and let me know if my sound is coming across fine. Thank you. Thank you for confirming. That sound is good. Thank you. Hello, everyone. Let's get started. Today's session of Nailing FX, the week ahead. Today's session, so Nailing FX is a series of webinars where we look at the Forex market from various angles and different trading styles. We have a series of webinars. Today's session, the Saturday session, we focuses on planning for the week ahead. So we look at the major currencies, the US dollar, the euro, the GBP, Australian dollar, all the major currencies, and look at for strength or weakness in these currencies, and accordingly plan our trades. So that gives us an outlook on the big currencies for the week. Okay. Some of the other webinars as part of the Nailing FX series upcoming. We have Wednesday 24th by OPA, and then I'm doing one on 27th of June. That's on FX Street. We also have other webinars coming up on the youtube.com/c/trade with UFOs. Those sessions are on Monday, Tuesday, Wednesday, Thursday, and Saturday. So very busy calendar. Let me quickly show you the um, calendar. So this is June, and this week we have Andrew. Andrew's doing this session at 8 a.m. New York throughout the week. So that's Andrew's session. We also have one session from Bert Opa. So that's again on Tuesday, right? So that's these Nailing FX webinars on Trade with UFOs channel. We also have the series going on the FX Street channel. So the next one coming up is 23rd of June by Bert Opa, and then 27th, that's me. Okay. So those are the upcoming webinars, and do join us live if you can in those sessions. And if you can't join us live, then hopefully you get to see the recording. Okay. Everything okay so far? Before we start, so let's go ahead and look at the week ahead. What's on the calendar in terms of events and reports. So this is early morning Monday on the in the Eastern Hemisphere of the world. According to GMT, that'll be 2300 Sunday. That's late on Sunday. We have the RBA Governor's speech from Australia, Reserve Bank of Australia, followed by Monday around afternoon time GMT. So all these times are as per GMT. Please do adjust the time as per wherever you're located in the world. This is 3 p.m. GMT on Monday. We've got again governor's speech on the Canadian dollar. Tuesday, we've got some news coming out. Services and manufacturing PMI numbers get released. So this usually does cause some fluctuations in the market. And given what's been happening over the past few months, where services and manufacturing sectors were affected, so these numbers become very interesting to watch at this point, because we could have some surprising numbers coming out. That's on Tuesday morning, GMT 7:15, 7:30. And then on Wednesday, we have interest rate announcement on the New Zealand dollar. And again, we have US dollar Fed chair testifies on Wednesday, 16. Okay. So those are the major events and reports scheduled between 22nd and 26th of June. Nothing really after Wednesday, Thursday, and Friday seem to be rather quiet days. However, we never know what surprises come out in the market. But at least in terms of what is on the calendar, we don't have anything significant after Wednesday afternoon. That's after the Fed chair testimony on from the US, right? Everybody okay? Shall we start? Okay, so before we start, just like to quickly, some of you were in the session. I'm just going through some of the names. You were part of the session last week as well. So let's quickly do a review of the trades that, so these were the trades we had discussed, trading ideas we had discussed on the 13th of June the previous Saturday when we met. We had put out some trades. So none of them got triggered. The only one that came really close was the USDCAD. We came really close to 3702, but yeah, missed it by. So let's go ahead and check that 3702 area. So 3702. So we were being a little conservative here. So this is where we came closest. None of the other trades really came this close. We could have already, almost caught it. Just want to show you something interesting here. So let's say we had, when we were planning this trade a week back, this is what it looked like, right? So we had a confirmed down climate, and we had a red UFO here, which is in other words, we could have placed our sell order here. So that was one option. Okay. I was just being a little conservative, and I put it here just because the stop loss was going to be here, so I didn't want to take that much risk, and just to optimize on risk, I sort of moved the entry here. So had we left our entry here, where the UFO was, right? So the UFO was here. Had we taken entry where it was and taken a little additional risk, then we would have actually caught the high of the week. And right, so that would have been the result there, right? So we would have been in the trade, but because we were being a little conservative, we missed entry. That's okay. Right, so that's the only trade that came sort of close. None of the others really got close. Euro, we are quite far. Dollar index also didn't make it there. So this time, when we look at the charts, I'll show you these numbers that were discussed in the previous session. Do will continue next month. Jamie Cruz, not sure what that question means. If you can be a little more elaborate with your question. The other trade we were in was the Australian dollar trade. Right. So last week when we met, target one was hit. Target two was pending, and I was hoping we get to 6912. Again, interesting how it played out there. So just want to so initially we had planned entry here. So this was our entry, 6804. So we got entry that was the low of that week. Our target was here. So our target was here, 6912. We missed it by 20% of a pip. And then we were somewhere here. We were up about 67 pips the second time. Then the week opened, so let me zoom in just in case you can't see the chart. So this is where the week closed. We were still up on the trade, and I was hoping that at least, by next week we can go and hit target two. But instead it came and hit our stop loss. And well, the stop loss was the low of the week. Okay, so yeah, so missed it by missed target by less than a pip here, got stopped out by just one pip here. We caught the low of the week two times, so getting very, very accurate there, but we were just not that fortunate, and that's why we ended up giving up what we made. So total net BNL was what is your UFO calibration? So this is set as very good question, Wahyu. I'll answer that question in a second. So, net PNL, we ended up with, giving away what we made, so nothing. And then none of the trades triggered, from last week. We just missed the high of the week, narrow miss on USDCAD. No more trades triggered, and therefore, nothing really happened. But we've sort of come close to the entries that we had planned, and this week going forward, we can refine some of our entries. So Wagyu, it's on the higher side. I've placed it above 70. So that's the calibration on the AutoUFO. Okay. I was a little lucky on the US. Yeah, and again, I think you took your profits. That's why you were lucky. Yeah, but anyways, we just missed it by one pip here, one pip there. So, but I'm glad you could profit from the trade. Yes, I know. And again, you did tell me that you did close the trade. So that was a wise move on your part, booking your profits and locking in your profits. That's always a good thing. Let's get started for the week ahead. If any no more questions, we can look at the week ahead. And today, the trades that we planned today. So some of them we'll carry forward. Some of these may still be relevant, like on the 6th of June, some of you were attending the session, and I said, this is a trading session where we plan for the week ahead, but however, these trades are valid for 10 to 15 trading days, right? So if that was true on the 6th of June, which means a lot of these trades are relevant for the entire month. So while you could be trading very actively during the week, you got short-term trading sessions here, so you could be trading intraday basis. These are trades that you can leave on for a couple of weeks. So give it some time. Um, and we are a little extra cautious. I don't go so aggressive with taking entries here, because end of the day I just need one or two of these trades. For example, this one trade with target 1 and target 2 was the plan was to make about 135 pips, right? So the whole plan, the way the session works is, we look at the markets, we set our orders. So today is a Saturday, markets closed, no reason to be trading. However, this style of trading you can do when the markets are closed. Plan for the week ahead, get an outlook on not just the major currencies, like some of you were there in the last session. We also talked about the equity markets, right? So, and if any of you remember the discussion, so what was our outlook based on our analysis of the dollar index and the major currencies? What was our outlook on the equities? Were we bullish or bearish? So just like to get some answers from those of you who were attending the session last week. So last week we were looking to short the US dollar. So we said equities are going to be bullish, and more or less what we got to see in the beginning part of, as soon as the week opened, we saw a strong rally going up into the supply, and most of the week, price was. So this is what we had discussed. We had discussed the bullish scenario, which is what we got to see, and then price, except for yesterday towards the close of the session, we had some bearishness coming out, but by and large, most of the week was up, and we had already figured that out just by looking at the major currencies in the previous week, right? Exactly, Jamie. We said it's going to be bullish, even without looking at the actual equity index charts, right? Just by looking at the major currencies, we said looks like equities are going to be bullish, looks like it's going to be a risk on sentiment, and that's exactly what we got to see. So that's the beauty about the session, or the analysis that we do on the weekends. After market closes, you can look at the charts, and you can have your plan ready. So if you know that dollar is more likely to be the dollar US dollar is more likely to be bearish, then you can plan your trades throughout the week. You know what direction you should be looking for, um, right? And if the euro dollar is bullish, then we also know what the direction should be, even in your shorter term trades. So not just for the longer term trades that we are planning right now, even for the shorter term trades, you do get your outlook and you do get your orientation, right? So let's go ahead and plan for the week ahead. So last week our plan on the dollar index was to take a short at 97.93. So let's go back to the numbers here. 97.93 was the planned entry. Stop loss was 98.31. Now we've come pretty close. Markets just, when market opens with a little bit of gap, we could already be in the trade, right? And so that can, again, Monday we'll have to see how things work here. Anyways, I would recommend that you wait at least till London open on Monday before you place the order. So right, so whatever we discuss now, I'll also give you a plan on when to place the order. Most of us can't place the order. Most of our platforms and brokers won't accept the orders when the markets are closed. You have to wait for market to open. So market opens midnight, or rather early morning Tokyo. That's when market opens on a Monday. But by the time most of us get to place the orders, it'll be sort of London open time. And I would strongly recommend waiting till the London open on Monday before you start placing these orders, that's when the good liquidity comes in, and that's when the spread goes down. Okay, so we'll wait and watch and see where it plays, but I would like to take my entry for this week. Step number one, again, we look at the big picture, right? Step number one, very simple. Look at the big picture. We're looking for a weekly trade, in the sense a trade that can last a couple of weeks, uh, can play out in the next week itself, can go into the week after, and so on and so forth. So we start by looking at the big picture, the weekly chart. And on the weekly chart, we use our Auto Climate app. So that's a trading app that calculates probability of direction. And we get an indication by the color of the dots and the size of the dots, in the sense, is it a thin dot? For example, this one is a thin dot. Hope everybody can see that clearly, right? So this is a thin dot and that's a thick dot. So between the thin and the thick dots, they tell us whether the climate is confirmed or not. The thick dot suggests that it's a confirmed climate, which is confirmed direction, and the color of the dot itself tells us whether it's an upside or downside. Now it's a red dot, thick red dot, which means it's a confirmed down climate. We should be looking for selling opportunities. Okay. So the big picture tells us that it's a confirmed down climate, and not really surprising when you see, all the bearishness that was happening in the last two odd months, especially the heavy selling that happened in the late part of May, right? Starting the late part of May, going into June, we're still struggling. The bulls are still struggling to hold on. We're seeing a little bit of green coming up in the last 2 weeks. So they've been trying to push up, but by and large, they're faced with this kind of a selling pressure. They're just about to hit all this selling pressure here, right? So if it's a confirmed down climate on the big picture, now we go to the smaller picture, which is the 240-minute chart or the 4-hour chart, and we use another trading app called the UFOs, Auto UFOs, and the UFOs are where uh, we could see unfilled orders waiting, which is unfilled limit orders placed by the big institutions. So when you see red UFOs, those could be unfilled sell orders and therefore potential turning points. For example, here last time when we were looking at it, we saw that price had already bounced from this green UFO, right? And then later on in the week, after we met last week, it did come in one more time into that area of the green UFO and took it off. So this is what we're expecting, right? So the UFOs indicate to us potential areas of reversal where price is likely to change direction. So if price is coming down into the UFO, it is likely to reverse from that area, and that's where we want to plan our entries on. So the reason we didn't look at a long last week, so anybody in the room, you want to answer that question, why did we not look at a long? So we already got a confirmation here that this area, we got a test, and the test was a positive, which was telling us that there is a strong likelihood of unfilled orders located here. Why did we not plan a buy or position here? Why were we planning a sell position here? Anybody? Cherian, do we need to better confirm this EMA 9? Sure, Vayu, you seem to be pretty clued on. Cause of the climate, Miguel, perfect, yes. The climate was down, therefore we didn't want to go long. Perfect answer. Vayu, yes, we do use some of those additional tools. That's part of the strategy where we look at the EMA number. We do look at it for the weekly as well. Okay, so you can definitely use that. So the reason not to go long here, it was suggesting that this was an area of reversal. However, climate was confirmed, which is there was more pressure to the downside. So therefore, going long would not have been ideal, which is why we were looking to short. However, it didn't really get up there. There was a lot of selling pressure here itself. Now going for the week ahead, climate is down, confirmed. We look to sell. We have a UFO here. 97, 93. The only reason I want to, so this week I'd like to go slightly higher. And for the dollar index, for a weekly trade, I like to put about 30 cents of risk. So I'll just take this higher here, 98.46. Again, this has come out of, back testing and using it over, many years of, trading the dollar index on these time frame combinations, the weekly, using the weekly and the 240 weekly for checking the climate, and 240 for actually planning the entry, exit, target, etc. So 30 cents is about what works very well. So just going to be a little conservative again. Sometimes we miss entries being conservative, but uh, you're better off erring on the side of caution, right? So we'll go on the upper part again. Just because of the weekend gap, we could have a slight gap coming up into this area, and also spread being really high when market opens, right? So we don't want to be getting in at that point of time. Wait till London open on Monday, and that's when we can look to enter 98.16, stop course at 98.46. Okay, everybody okay with the plan? Any questions? If you have any questions, I'll answer them before I put this plan on the Excel sheet, which we get to review next week. So next week's session, next Saturday, if you're joining the session live, we'll be on the FX Street platform. So I'll just wait to see if there are any questions on the dollar index. Any thoughts or comments? If not, I can finalize the plan, put it on the Excel sheet. Okay. Everybody okay with the plan, dollar index? It's very important to be convinced with this plan, because this will give us then direction on almost all the other major currencies. The way we trade the euro, the way we trade the GBP, New Zealand dollar, Australian dollar, Japanese yen, Swiss franc, Canadian dollar, everything comes from here. We start with the dollar index, that's the US dollar. That's 80% of the world's currency markets transactions happens on the US dollar, and therefore you need to be perfectly convinced, comfortable, confident about this plan. That helps you in trading all the other currencies. Miguel says yes, so I take it as a yes. Everybody's okay with the plan. Let's put in the numbers. We take entry at 98.16, stop goes at 98.46. Okay, so let's come to 28th of June. We're taking the sell side or the short side, and I'm just gonna adjust the Excel sheet a little bit. Yep. So entry goes at 98.16. Stop. So last week I noticed there was there was a bit of an error in the USD CAD. So instead of entering 1.37, I actually accidentally entered 0.3702, and that did affect target 1, target 2. But I hope you did adjust the numbers before you took entry. Do you maintain the plan if zone is tested before London session? Yes. Noel, so I'm expecting it'll be very highly likely that we'll see this zone tested, especially this area here, right? This area here, 97.83, we are already at 97.66. So with about just about less than 20 pips of gap, which we can expect. So a lot of news coming out in the market, right? A lot of sensational headlines out there, enough to make the markets gap at least 20 cents. I'm saying may not be a huge gap, but given how volatile the markets are at this point, and given all the kinds of news that's coming out. So for example, on Friday we had a new headline saying Apple closes stores in 4 states as virus cases rise. Now again, this did affect um, the stock market or the equity markets more than the currency markets, but very likely that over the weekend we get a little more some significant headlines, which then in turn leads to a little bit of a gap up and down. So I'm really expecting this zone to be tested, but nevertheless, even if it gets tested, so even if it gets into this area, not a problem. We wait for Monday morning, London open, spread becomes low, liquidity comes in, we can place this order. Okay, hope that answers the question, Noel. Fantastic. Okay, so 98.16 to 98.46, that's the entry and stop loss, safety target, final target. Hope everybody got the numbers. Please do make a note of the numbers. We will stop on this chart after we've filled it, after we've looked at all the major currencies. We will stop at this chart right before we end the session. You will still get a chance to take a snapshot. If not, you can still watch the recordings on YouTube and you can still get the numbers. However, if you want to be jotting down the numbers right now, that will also be a good idea. If everybody is okay with the plan, let's move on and look at the euro dollar. Everybody okay? So let's move on and look at the euro dollar. Again, just a quick review of the big news and events. So we've got news on, always good to have an eye on, when this news comes out, and accordingly, do we need to adjust our entry? Sometimes sometimes it makes sense just to stay out of the market a little bit. For example, on Monday, maybe around this time, be cautious on your trades on Canadian dollar, take off your orders just before the speech begins. Wait for a little bit of volatility to come in as a result of the speech, and then you can wait for about 15 to 30 minutes and you can put your orders back in. So if we have a trade on the euro, we need to be mindful of the numbers that come out on Tuesday morning, GMT, right? Around 7:30 GMT. Also, if we're taking a position on New Zealand dollar, we need to be aware of the interest rate announcement that comes out on Wednesday. So not that we're expecting any change in interest rates nowadays. The forecast is that it'll remain the same. We haven't seen any change in interest rate in the last 2 to 3 months. There was a round of significant reduction in February on most of the currencies. That's as a result of the pandemic and the economy suffering. That's why most governments or most central banks did reduce interest rates in late February, early March. But since then, we really haven't seen any change in interest rates. Okay, so not that we're expecting any change in interest rates, but anytime you have news on the interest rate, there's a press conference after the press conference after the interest rate announcement, in which some key statements are released, which ends up causing some volatility in the market. So we just have to be aware of these key events that are coming up. So for the euro, we'll stick with our plan. So this was a trade that was planned on the 6th of June. Market still hasn't come here. We'll stick to our plan. In fact, this week we can go slightly higher above up here. So this week I will not be so conservative here. Instead of planning our entry here, I'll go at 1.1035. Okay, and stop goes at 84. So if that's a little bit of you can adjust the lot sizes accordingly. So let's say your usual position size is one standard lot. So then adjust the position size as per the risk. So let's say on 30 pips of risk, you go with one standard lot. Now this is this is what this is almost 50, right? So then you need to go something like 0.5, 0.6 lots. Okay, so you can adjust your position size, because now we're going with a slightly wider zone here. Entry at 1.1034. Okay, why are we doing this? Again, big picture, look at the weekly. When we look at the weekly, we check the auto climate. What is the climate telling us? The climate is telling us that it is a confirmed up climate, right? So if it's a confirmed up climate, we will look to buy. Where will we place the orders? On the 240-minute chart, we look for the UFOs. Sometimes we adjust the entries. If we think this is too much risk, for example, past 2 weeks, I was planning entry here, 1.1019. But this week, it looks like, so it's 1177. So that's about 140 pips away. Given the low level of volatility we are seeing in the markets, and there's the only significant news that is likely to impact the euro comes out on Tuesday, right? And nowadays the euro is about 60 to 65 average true range. So by Monday, if we see a little bit of movement, and Tuesday we get the full ATR, then we get entry here. Okay, so we'll go with this here. So adjust the number of lots accordingly. So okay, everybody okay with that? Um, because now we're going with about 50 pips of risk here. So we'll take entry at 1.1035. So I'll put that in as well. The euro, we are buying 1.1035. 0, let's say 85. Okay. So that's our plan for the euro dollar, the big one. So um, another interesting aspect of the weekly analysis that we do, that we're doing at this point is um, so so the likely movement, or what we're expecting. So what we're expecting to see in the markets is, yeah, so give me a second while I adjust this. Hoping, I'm hoping everybody can see it. So what's our plan? Our plan is something like this, right? It comes down and hopefully, touches the UFO and then reverses, right? So that's our plan. So now on Monday, so we're actually going long on the euro, right? Our plan is to buy the euro, but buy after it goes down. So if on Monday, if I see this going down, if on Monday the euro is bearish, will I be surprised? Will I be surprised? Good morning, Boyan. So will I be surprised to see the euro? I'm actually have a buy position on the euro, so I'm looking to buy. But then if I see some selling on Monday, then I see some selling on Tuesday, will I be surprised? Or will it be exactly what I was expecting? So if I see some bearishness on Monday and then some more bearishness on Tuesday, no problem, because that's exactly what I want, right? And then on a Wednesday, if I see price sort of basing around this area, and on Thursday, if I see it turning up and going down, and then on Friday it sort of gets to our targets, right? So that's exactly. So notice what's happening on your shorter term trades, on when you're trading the euro on the shorter time frames, let's say using the 15-minute, the 5-minute. On Monday I would be shorting the euro. On Tuesday I would be shorting the euro right up until it gets into this area, the 1.1050 area, right? That's when I know I need to stop shorting the euro. And then, because now the bigger picture, the weekly and the 240 is coming into play. So the 15, time for me to stop playing the 15, the 5, the 60. Everybody okay with the plan? Yeah, making sense. So on the 15 and the 5 and the smaller time frames, I'll be looking to short on Monday, Tuesday. Wednesday, I'll expect some kind of a basing and a reversal. And a Thursday and a Friday, when I'm doing my short-term trading, I can be looking to go long the euro. Okay, so that is in a way this another facet of this, the planning our trades on the weekends. We look at the markets and gives us not just gives us direction for the bigger trade, but also helps in okay, so Negin is saying no. um, Negin, what was not clear? I- is there a specific question, Negin, or were you answering the question that will it be surprising to see the euro going down? Sorry, I didn't. So there's a bit of a lag between when I speak and when I see the comments coming up. Right? So maybe you were answering that question, which is we will not be surprised to see the euro going down on a Monday and a Tuesday. That's exactly part of the plan. The point I was trying to make is this analysis that we're doing, it helps us in our plans, not just for the big trade, the bigger picture trade, but also in our shorter term trades. when we're trading the smaller time frames on a Monday, intraday, Monday, Tuesday, Wednesday. So, sort of gives you the whole plan for the week ahead. All right. So that's the plan. We put in the numbers, our entry, we've got a long at 1.1035, stop loss goes at 1.0985. Just making sure I've got the numbers right. Target one, that's our safety target. That's a 1:1 ratio. When it hits the safety target, our risk is neutralized, and then we wait for the big target. That's the 4:1. Okay, so that's the 1.1235. Hope everybody okay with the plan. Let's move on and look at the next big currency, the other major from Europe. We've got the GBP USD. GBP USD, step one. What is step one? We go to the bigger picture with the weekly. Look for auto climate. Auto climate tells us direction, confirmation, right? Okay, so I'm just reading a comment. Made Mandari, hello. Can I sell on Monday until price reach that buy level? Made Mandari, excellent question. I'm glad you asked that question. Now, um, so this is expected, right? So I've drawn something on the chart here. This is our expectation based on this strategy, right? Based on using auto climate, based on using the auto UFOs. Now, this is our expectation doesn't mean this is exactly what's going to happen. If the case was that this was exactly what was going to happen, then yes, we sell on a Monday, we sell on a Tuesday until it gets here, we start buying on a Wednesday, and we keep buying on a Thursday. So yes, but made Mandari, we don't know if this plan works out like this, right? So for example, last week when we planned the trade, we were somewhere here, right? So let's go back. Give me a second. Yeah. So last week when we met and we were discussing, we were here. So what was the expectation? The expectation was for price to, sorry. So the expectation was for price to go here, right? So this was our plan last week, right? Then it goes up, right? So this was the expectation. However, what actually happened was here. So I'll just, so what happened was this, right? This is what actually happened. So, so if we had followed that plan, so my expectation is that Monday and Tuesday it goes up. Around Wednesday we get entry, and then Tuesday, Thursday and Friday it goes up, and I'll be going long. And based on this anticipated move, if I had shorted the euro on a Monday, how would it have worked out? We already had position since say June, so can't we hold that position as long as the climate's still confirmed? Badri, exactly what we're doing. We're still holding on to the same position. No change. Made Mandari. Hope that made sense. Or am I saying your name right? Madam Andiri. I don't know how to pronounce that. Madam Andiri. So based on an expectation, if I had shorted the euro on a Monday, then I would have been very disappointed because I would see price going up. So the point I'm trying to make is this is just our anticipation that if market goes down, if it goes down, this is where we would like to buy. Doesn't mean that market has to do exactly this. Market can go up one more time. So my expectation is here, but what actually happens could be this, right? It can still go up again. Maybe this time it goes into where the Martians are actually located. Yeah. So that's the shell of the spaceship. That's where the aliens are really sitting. Just kidding. Okay, so this is what could actually happen, right? So if I short on a Monday, then I'll be really disappointed, right? So I'll wait. Exactly. Now, Made Bandri, just to continue answering that question. Now on a Monday, based on your strategy, if you see market going down a little bit, then we can wait for a pullback. So what's happening here? Sellers are coming. There's a little bit of a pullback. Again, push, right? Pullback, push, pullback, push. Now Monday, if we see a little bit of a push, wait for the pullback. Then it's not surprising. We're expecting to see this go down, and if you're expecting to see this go down, you can wait for the pullback and sell it. Okay. Yes, made Mandri. So according to this plan that we're discussing in this session, yes, we wait with a limit order at 1.1034. Okay. But I was just giving you another context. Another way of looking at this is if on a Monday on the smaller time frames you find the shorting opportunities, that's exactly what we would be expecting to see, right? And you can keep shorting until you get up to the 1.1050 area. Around the time price gets to the 1.1050 area, it's time to not use the smaller time frames, the 15 and the 5 now, because the bigger picture is going to play, right? The weekly up climate, the 240-minute, the 4-hour UFO, they are going to come into play. So when they come into play, they will overpower your strategies on the lower time frames. Okay, cool. So yes, we see the point. Okay, Jamie, I hope I was not overemphasizing it. Right? GBP USD, let's look at the plan. So again, keep it simple. Uh, you know, weekly, we're making it so simple, right? Look at the weekly, look at the climate. If it is confirmed, you have a trade. If the climate is not confirmed, you don't have a trade, right? So right now on the GBP USD, we still don't, for the past 3 weeks since we've started looking at it, these in the Saturday sessions here, we haven't had a confirmed climate. We have this climate, it's an up climate but not confirmed, so we will say pass, right? Plenty of other currency pairs out there for us to trade, so we'll pass the GBP as GBP USD just like we passed it the previous weeks, in the last 2 weeks. Miguel, I'm reading another comment. Miguel, green at 1.1120 for Euro USD. 1.1120. Okay, so that depends on the settings you're using. I'm using slightly higher calibration here. Eventually, when we get through a few more sessions, I'll reduce the calibration, but because we get to see fewer UFOs, right? So if you reduce the calibration, you may get to see a few more UFOs. This is the one that, yeah, one point, all this area is, looks like there's a lot of buying pressure here. If you're comfortable taking the entry here, you can absolutely do that. 1.1120 area, I can see that area. That's also looks like it has good buy orders, potential of having buy orders there. That's however, Miguel, again, I would recommend waiting till the London Open on Monday. Just give me 1 second, let me take a sip of water. So again, so I would recommend waiting till Monday morning till you see the spread going down, and if it's still in that area of 1.1120, you can go ahead and take that if you're more confident and comfortable with that area. I'd just rather wait. The other reason is that because it's a weekly plan, and we have some news coming out on Tuesday, right? So Monday we could have a little bit of a gap based on whatever all those everything that's happening in the world. Very volatile times at this, so we could already have a gap on Monday, and then with Tuesday the manufacturing and services numbers getting released, we could have some additional volatility. So I'm just factoring in a little additional volatility, and that's why I'm taking looking to take a trade around the 1.1050 area. Okay. So from a short-term perspective, maybe on a Monday you can look for a long here. That's perfectly fine. But for the weekly plan, I would rather wait here. 1.1035 area. Okay. Okay. So we've put our plan down in here. That's on the euro. We've also looked at the GBP USD. Let's continue. New Zealand dollar. If there are any other questions, comments, please do put it in the chat box. New Zealand dollar, we have a confirmed up climate. It's confirmed. We had an entry planned here at 6253. We will retain that, and also keep in mind we have a UFO slightly above this, but also remember that we've got news coming out on the New Zealand dollar, and that's a big one, right? So whenever there's an interest rate announcement on a currency, definitely brings in some volatility. So therefore, again, I'm factoring in a little extra movement both on the euro and the New Zealand dollar. So we'll go with our entry here, 0.62534. Why are we doing that? Because on the weekly, we have a confirmed up climate. Hope everybody okay with the plan. Let me put in the numbers, 6253. And those are the numbers that we had even from the previous session. So let me just do a copy paste. Okay. 6255, adding spread, 2 pips for spread, taking a stop at 6215. Okay. So that's the New Zealand dollar. Australian dollar uh, teased us a little bit, wasn't so kind to us earlier. We were discussing what happened with our plan that was trade on the 6th of June. We got entry in the following week, which was the low of the week. We missed entry. We missed profit by 20% of a pip. That was really painful when you miss target of 108 odd pips by 20% of a pip, and then came out and next week came and touched our stop loss just on the pip, and then went on and would have hit target. So that would have been a nice trade had we taken entry 2 pips below here, set our target 2 pips below here. That would have been a perfect trade, and had we put our stop loss 2 pips below. Anyways, we missed a trade, not a problem. Lots of other trades, setups that we planned. Australian dollar, let's plan a trade. We're looking at the weekly picture, the big picture, looking at the climate. Auto climate tells us it's a confirmed up climate. In the confirmed up climate, we will look to buy. If we're looking to buy, where do we buy? We look for UFOs. Right now, considering that we already have planned a trade on the New Zealand dollar, and them being neighboring countries, very high level of correlation amongst the currencies, and therefore, if we have a setup on the New Zealand dollar, we can pass the Australian dollar, especially because we don't see any UFOs close by. The closest one that we see is all the way down here, 6.4. That's about almost 400 pips, 375 odd pips. Unlikely that we see Australian dollar moving 375 pips during the week. So therefore, given that we already have a trade setup on the New Zealand dollar, we can pass the Australian dollar. But by and large, the New Zealand direction on the New Zealand dollar is very similar to the direction we're expecting on the euro dollar, which is bearishness in the initial part of that week, and that bearishness is nothing but to come down and hit some of the good demand. So I'm expecting some good demand here as well. So Australian dollar, we just in case it'll help you with your shorter term trades during the week, we have some good buy orders, potential of buy orders waiting here. And if I were to reduce the calibration on the UFOs, we'll probably find one here. Okay. Again, if you want to learn more about auto climate, the app, if you want to learn more about auto UFOs, you can obviously check out all those details if you go to www.tradewithufos.com/Cherian. That's the website. You'll get all the details about the apps. You can read about them, experiment with them, all that. As you can see, very interesting apps, helps you plan your trades in a very methodical way, systematic way, keeping your emotions out. Just go by. So autoclimate is based on probability and statistics of price movement of the asset. Auto UFOs is based on what happened there between buyers and sellers in certain areas. So this is an area where there seems to be significantly higher buy orders than sell orders. That's why it is a potential area of reversal. As you can see, price did try to come into this area, couldn't even come close, right? So the buy orders were probably stacked even higher. So looks like there was some buy orders even higher, not just here, but the auto UFOs was telling us that This is an area where you can expect to see some buy orders. Didn't really come into that area, even picked up some orders that was stacked up here, and there was a huge reversal. Cool. So that's the plan on the Australian dollar. Since Australian dollar wasn't kind to us, was teasing us a little bit in the last 2 weeks, we're going to ignore the Australian dollar. We don't want to put a trade on the Australian dollar, right? We'll pass the Australian dollar, look at the USD JPY. So again, okay, we've got 10 more minutes and we've got 3 more currencies. So please type in your questions if you have any. USD JPY. So last 2 weeks, whenever we looked at the USD JPY, we did not have a confirmed climate. Finally, we see a thick red dot, which is a confirmed down climate. So finally we have a trading opportunity. Again, we have 2 UFOs here. Again, I would like to show you how the UFOs work. They actually work like this, which is after this after this big red candle was formed, as soon as this red candle was plotted, we knew there were unfilled orders here. This UFO was already plotted. We could have placed our sell order here, 107.60. Price would have come into that area and would have reversed from here, right? But that is in hindsight. We didn't see that. We couldn't take this trade last week because we didn't have a confirmed down climate. However, this week we do have a confirmed down climate. Now we have the choice. We have the choice of going with this UFO or this UFO. We've got two UFOs lined up, one above the other. Since this UFO was recently tested and tested positive for sell orders, right? So that was a good test. The test showed us that indeed that this area had sell orders, because of which price just couldn't go any higher. Price had to stop going up there and reverse and start going down. So we have a positive test coming out of the UFO. However, having tested this area and US dollar, again, Japanese yen being strongly related to gold, we could see some big movements. Just want to be conservative with the USD JPY. And since we have so many trade setups, so again, I'll touch upon that. So how many of these trades do we really want? Right? So we're putting in about 6 or 7 trades here, right? On an average, we find about 5, 4 to 5 setups. Now we really don't want 5 to 6 entries, right? So my recommendation is, as soon as you see a maximum of 2 entries, 2 of those orders triggered, you can go and cancel the other pending orders. We don't want to be in 5 of those trades. Why do you think we don't want to be in all of those trade setups? So let me pose the question here. So why do we not want 5 trades? UFOs overlapping is a good thing. Yes, correct, Jamie. So I posed a question to the room: why do we not want all 5 or 6 trades to trigger? Too much risk, margin, Miguel. Yeah, that's also a good point. The bigger reason that we don't want all these entries is uh, if you notice, they're all positively correlated, or they're all betting on that one direction, right? So this is our analysis. Our analysis is telling us that the dollar is likely to go up and then reverse during the week. So go up in the initial part of the week and then reverse during the latter half of the week. That's what our analysis is suggesting, and that is the direction we're taking on every single trade. For example, here on the euro, wherever the USD is the quote currency, we're taking a buy. Wherever the USD is the base currency, we'll probably be taking a sell, right? So in a sense, they're more or less the same trade. And if we go wrong, so we're not right all the time, right? Sometimes we go wrong, and that's perfectly okay, as long as you don't go wrong more often than you go right. You're fine. So we do go wrong sometimes, and when we do go wrong, we don't want to be going wrong on 5 trades, right? So if you're wrong on 2 trades, that's good. That kind of risk is manageable, and if you're right on 2 trades, you're hitting about 125 pips on each trade. target 1, target 2 combined gives you about 250 pips for the week. I think that's decent payoff for 1 hour of analysis that we put between right now in the session. We put about 1 hour of analysis, and if we can manage to get a yield of about 250 pips from a 1 hour of analysis session, I think that's a decent payoff, right? Also, in the meantime, having managed our risk and having kept our risk to a manageable level. Okay, so that was the long-winded answer as to why we don't want more than 2 of these trades to trigger. Again, it's very easy to manage in the sense we place the orders around London open on a Monday morning, and then highly unlikely that we get entries on all 5 or 6 setups at the same time. So if 2 or 3 of them have triggered, it's not like you have to monitor them constantly and have to be checking your phone all the time. The applications on your phone where you're checking all the time, has order been triggered or not. Even if you're not checking your orders on your phone or your wherever you are, let's say you get some time during the in the morning, once in the morning, once in the afternoon, once in the evening, you're checking what's the status of your orders. Let's say you find that one has triggered, you wait for one more, check after a few hours. Maybe you've checked it during lunchtime. Check it after you've come back from work. You check if the second order has been triggered, and if the second one has been triggered, then you go ahead and cancel all the other pending orders. Okay, so USDJPY, let's put in the numbers: 108.34, and stop loss goes at 108.7. Okay, again, I'm 79. So again, I'm sort of approximating this area here. USDJPY, again, based on my experience, when we're doing this kind of a weekly trade, you need to put in about 35 pips of risk. But then if you're not comfortable, and if you're comfortable taking smaller risk, you can take it here. You can also take it here where the UFOs are overlapping. The only problem is if you take entry here, then that's a lot of risk, because you'll be taking entry here around the 107.88 area going all the way up here. So that's almost about 80 pips, which may be too much of risk, right? We've got 3 more minutes. Let's go through the USDCHF trade. USDCHF trade, we're still in the confirmed down climate. We've got a couple of UFOs. We had planned a trade here, 9627. We will stick to that plan, no change. Okay, so I'm just going to do the same thing, copy paste. So it's the same plan, still valid. Again, hope you remember the point. So now at this point, we will probably have 6 trades. USDCAD, I don't think we'll have a trade because we missed it last time, and we don't have a UFO close by. So last week we had a UFO right here. We could have got the high of the week, except that I was being a little conservative. If I was a little bolder, we could have got the high of the week. That was our UFO. We could have planned our entry here instead of planning it here, which was the 37. We had planned our entry at 3702. Okay. So here, yeah. So instead of taking entry here, had we taken entry, where the entire band of the UFO was, we could have had a nice trade, and we would have had the high of the week. The high of the week was that UFO, right, where the UFO began. We could have had a nice 367 going 350, just about 150 odd pips. So that's the plan on these kind of trades, where not necessarily we catch the high of the week each time, but sort of get the big reversal. So the big reversal on the USD CAD was here, right? And that's what we wanted to catch with our weekly income session, and we did almost catch that. You almost got it, missed it, just because we were being a little conservative. But having missed it, when we look at it, this week on the 20th of June, we see confirmed down climate. However, no UFOs anywhere in sight unless I reduce the calibration. If I go down and reduce the calibration, I will be able to see some more UFOs, but let's be consistent. That brings us to the end of this session, and hope everybody's okay with the plan. If you have any final questions for this session, I can discuss it. Otherwise, we will conclude the session and call it a day. So that again is our plan for the week ahead. Please take a snapshot. So let me check if all the numbers are right. All the numbers seem to be right. No trade on USDCAD. We've got 5 setups. Also remember, we want to be in just 2 of these trades maximum. Okay, we don't want to be in all 5 setups because they are all going in the same direction. And just in case we got direction wrong, then we'll be wrong on 5 trades, which is too much risk. Okay, 2 is good enough. Two is manageable risk, and if you're right on those 2 trades, I think that'll be a very, very nice payoff, right? So if there are no further questions, let's conclude the session. Thank you all for coming here, and hope to see you soon. Take care.